Ladies and gentlemen, welcome to Finance Reborn. Stop everything you're doing right now. This is not a normal video. This is an emergency broadcast. What I'm about to reveal is happening at this very moment and will impact silver prices within hours. Not days, not weeks. Hours. This is not speculation. This is not theory. This is breaking geopolitical news that has just sent shockwaves through global financial markets. The United States and Israel have launched coordinated military strikes against Iran. The Middle East is on fire, and silver is about to explode in ways that will make every previous price spike look insignificant. And I need you to understand something critical before we go any further. This is not just another geopolitical headline. This is the event that precious metals investors have anticipated for decades, the event that transforms theoretical safe haven demand into immediate, desperate panic buying, the event that breaks every resistance level and sends silver vertical. Right now, as I record this, futures markets are reacting, Asian trading desks are scrambling, central banks are issuing emergency statements, and the smart money that positioned for this exact scenario is about to be rewarded beyond imagination. Because while most investors are still processing headlines, while mainstream media debates political implications, the precious metals market is already pricing what comes next. And what comes next is a silver explosion that will leave unprepared investors watching from the sidelines. I'm here to show you exactly what just happened, why this specific conflict triggers silver's most explosive move in history, what historical precedents tell us about magnitude and timing, and most importantly, whether it's too late to position or whether opportunity still exists. Stay with me for the entire video. What I reveal in the final minutes about tonight is price action could be the most valuable information you receive this year. Now, before we dissect this breaking situation, I need you to do something for me. If you're watching this in real time as events unfold, hit that like button right now. It tells the algorithm this content is urgent and helps it reach people who desperately need to see it tonight, not tomorrow. And subscribe immediately because I'll be posting updates as this situation develops. Click that notification bell so you see every update the moment it drops. Let me walk you through exactly what has happened because the specifics determine the magnitude of silver's response. Within the past hours, coordinated military strikes have targeted Iranian nuclear facilities, missile production sites, and command infrastructure. The operation involved American air assets, Israeli strike aircraft, and cruise missile deployment from naval vessels in the Persian Gulf and Mediterranean Sea. This is not a limited strike. This is not a warning shot. This is comprehensive military action designed to degrade Iranian capabilities across multiple strategic categories simultaneously. Iranian air defenses have engaged. Counterstrikes have been threatened. Regional allies are mobilizing. The situation is escalating in real time with no indication of de-escalation pathways. Now let me explain why this specific conflict triggers silver explosion rather than gradual appreciation. First, understand the oil choke point factor. Iran controls the Strait of Hormuz, through which 20% of global oil supply transits daily. Any disruption to this choke point immediately spikes energy prices globally. Energy price spikes accelerate inflation. Inflation acceleration drives precious metals demand, but it's not just oil. The Strait of Hormuz also handles significant shipping traffic for industrial metals, manufactured goods, and raw materials. Supply chain disruption from military conflict in this region cascades through global commerce. Silver responds to both inflation expectations and supply chain disruption. This conflict triggers both simultaneously. The response magnitude reflects compounded drivers rather than single-factor influence. Second, understand the safe haven panic factor. Geopolitical conflict triggers immediate safe haven demand. Investors flee risk assets and seek protection in assets that hold value during chaos. Gold and silver have served this function for millennia. But this conflict is different from previous geopolitical events. This involves the world's largest military power directly engaging a regional power with significant retaliatory capability. The escalation potential is unlimited. Nuclear considerations exist. Global war scenarios become non-trivial probabilities. When investors assess unlimited escalation potential, safe haven demand becomes unlimited safe haven desperation. The buying is not measured and strategic. It's panicked and indiscriminate. Price sensitivity disappears. Buyers pay whatever necessary to secure protection. Third, understand the currency confidence factor. Military conflict of this magnitude strains government finances. War is expensive. Deficits expand. Money printing accelerates. Currency debasement intensifies. Investors recognizing these dynamics flee fiat currencies for hard assets. The dollar may initially strengthen as traditional safe haven, but sophisticated investors understand that war financing ultimately debases the currency financing it. They position in metals that cannot be printed. Fourth, and this is critical, understand the industrial disruption factor unique to silver. Iran and the broader Middle East region are not major silver producers. But military conflict disrupts global shipping, insurance markets, and industrial supply chains. Silver's industrial consumers face uncertainty about future supply access. They accelerate purchasing to secure inventory before disruption intensifies. Industrial stockpiling adds to investment demand. The combined buying overwhelms available supply. Now here's what historical precedent tells us about magnitude and timing, because past conflicts provide framework for expectations. Examine the 1979 Iranian Revolution and subsequent hostage crisis. Silver rose from approximately $6 per ounce to over $50 per ounce within 12 months. The percentage gain exceeded 700%. Examine the 1990 Gulf War. Silver rose over 20% within weeks of invasion. Gold showed similar percentage gains. Both metals sustained elevated prices throughout the conflict period. Examine the 2003 Iraq invasion. Silver rose from approximately $4 to over $8 within 18 months of invasion. The move represented 100% appreciation. Examine the 2022 Russia-Ukraine conflict. Silver spiked immediately upon invasion, rising over 15% within days. Subsequent volatility reflected conflict developments. The pattern is consistent across decades. Military conflict involving major powers in strategically important regions triggers immediate precious metals. Appreciation, followed by sustained elevation during conflict duration. But the current situation exceeds all historical precedents in one critical dimension. This conflict directly involves the United States in offensive operations against a nation with significant military capability. Previous conflicts involved regional powers or proxy engagements. This is direct great power military action. The magnitude of response should be calibrated to the magnitude of conflict. If previous regional conflicts triggered 20, 50, or 100% silver appreciation, direct great power conflict could trigger multiples of those moves. Let me show you what smart money is doing right now, because institutional positioning reveals informed expectations. Futures markets have opened limit up for gold and silver. This means prices have moved the maximum allowed in a single session within minutes of conflict confirmation. Trading has been halted multiple times as circuit breakers trigger. Limit-up moves indicate demand so overwhelming that normal price discovery cannot function. Buyers are paying whatever asking price exists. Sellers are withdrawing offers, anticipating higher prices. The market is one-directional. Physical dealers have suspended online ordering. When I checked major dealer websites within the past hour, multiple sites showed inventory unavailable or ordering temporarily disabled. Dealers are not selling because they cannot determine appropriate pricing and they cannot source replacement inventory. This dealer behavior is the ultimate confirmation. The businesses that profit from selling silver have chosen to stop selling. They expect prices substantially higher than current quotes. They're protecting inventory rather than capturing current premiums. Mining company shares have gapped higher in after-hours trading. The companies that produce silver are being repriced immediately to reflect expected higher silver prices. This stock market response confirms that sophisticated investors expect sustained price elevation, not temporary spike. Central bank statements are being issued emphasizing stability and liquidity provision. When central banks issue emergency statements, they're confirming that stress levels require official response. The statements themselves confirm the severity that precious metals are responding to. Now, let me address what happens tonight and tomorrow, because the immediate timeline matters for positioning. Asian markets are currently trading. Tokyo, Hong Kong, Shanghai, and Singapore are processing this news in real time. These markets are establishing price levels that European and American markets will gap to upon opening. Asian precious metals demand is already elevated due to regional accumulation trends. Chinese and Indian buyers have been acquiring physical metal aggressively. This conflict provides additional motivation for acceleration. When European markets open, additional buying waves will hit. European investors face closer geographic proximity to Middle East conflict. Their risk perception is heightened. Their buying will be aggressive. When American markets open, the full weight of global capital will be positioning simultaneously. The opening print for silver will gap significantly above current levels. The gap may be 10, 20, or more percent above pre-conflict prices. But the opening gap is not the end of the move. It's the beginning. Throughout the trading day, news flow will drive continued buying. Each escalation headline triggers additional safe haven demand. Each Iranian response provokes further flight to metals. The first 24 hours will establish new price ranges, but the conflict itself may last weeks, months, or longer. Sustained conflict means sustained precious metals demand. Now, I need to address the elephant in the room because I know some of you are thinking it. Yes, conflicts can de-escalate unexpectedly. Yes, diplomatic interventions can calm markets. Yes, initial price spikes sometimes reverse partially. These are fair concerns. Let me address them directly. De-escalation is possible, but unlikely in the immediate term. The magnitude of strikes suggests commitment to sustained campaign rather than limited demonstration. Iranian response capability suggests retaliation is probable. Escalation spirals are more likely than rapid resolution. Diplomatic intervention requires time that markets don't wait for. While diplomats convene meetings, markets price expected outcomes. By the time diplomacy produces results, prices have already adjusted. Early positioning captures the move regardless of ultimate resolution. Partial reversal after initial spikes is normal but misleading. Markets often consolidate after gaps. Weak hands interpret consolidation as reversal and sell. Strong hands accumulate during consolidation. The subsequent move higher rewards those who maintained positions. The appropriate response is not avoiding positions due to uncertainty, but sizing positions appropriately for uncertainty. Position for significant upside while maintaining risk management for unexpected outcomes. Let me give you a framework for positioning during this crisis. First, recognize that physical metal provides certainty paper cannot match. During military conflict, financial systems face stress. Electronic systems can fail, counterparties can default, paper claims can become worthless. Physical metal in your possession has no counterparty risk. Second, understand that premiums will expand dramatically. The spot price quoted on screens will not reflect actual acquisition cost for physical metal. Dealers who are selling will charge substantial premiums. Accept premiums as the cost of acquiring certainty during crisis. Third, consider that miners offer leveraged exposure with additional risks. Mining company shares will rise with silver prices, but carry operational, political, and financial risks that metal does not carry. The leverage cuts both directions if conflict de-escalates unexpectedly. Fourth, recognize that timing precision is less important than participation. Whether you buy tonight or tomorrow morning matters less than whether you buy at all. The move from current prices to conflict-adjusted prices will dwarf the difference between entry points. Fifth, maintain awareness that the situation evolves rapidly. What I'm telling you now reflects current information. The situation will change. Additional strikes, Iranian responses, third-party involvement. Each development shifts calculations. Stay informed and adjust accordingly. Here's what I believe is happening beneath the surface of tonight's events. We are witnessing the breakdown of the post-World War II security order. American military action against Iran represents escalation that reshapes global strategic calculations. Nations will reassess alliances, security arrangements, and economic dependencies. This reassessment accelerates trends already in motion. De-dollarization, commodity accumulation, precious metals reserve building. The conflict doesn't create these trends, it accelerates them dramatically. Silver's response tonight is not temporary fear spike, it's recognition that the world has changed. The stability assumptions that enabled suppressed precious metals prices no longer apply. The new reality demands new valuations. Here's my question for you, and I need your response immediately in the comments. Are you positioned for this conflict? Do you hold physical silver that protects you regardless of how events unfold? Or are you watching from the sidelines as history happens? Your answer determines your outcome. Drop your position status below. And if you're watching this hours or days after posting, share what's happened since. Your real-time updates help everyone in this community understand how events are unfolding. Let me leave you with one final thought that captures this moment. Tonight, the world changed. Military conflict between great powers is no longer theoretical. The safe haven function of precious metals is no longer academic. The reasons you accumulated silver have been validated by events. If you positioned before tonight, your conviction is being rewarded. The gains you see tomorrow morning are the result of preparation meeting opportunity. If you haven't yet positioned, the window is narrowing but not closed. Tonight's prices are lower than tomorrow's. Tomorrow's prices are lower than next week's. Each delay costs more. The silver explosion is not coming. It's happening. Right now. Tonight. This is Finance Reborn. It's tonight's date and the world just changed. USA and Israel have struck Iran. Silver is exploding. History is being written. I'll be posting updates throughout the night and tomorrow as this situation develops. Make sure you're subscribed with notifications on. If this emergency broadcast helped you understand what's happening and how to respond, hit that like button. Share this immediately with everyone you know who holds silver or should hold silver, and comment your position status below. Stay safe, stay positioned, and I'll see you in the next update.